What is going on, guys? It's been a while. And, it's been so long that we need to go ahead and put some confettis in this. We got to go ahead and, hype this up. Why is that? Because the reason why I've been out is due to the fact that I've been perfecting a lot of things. I've been perfecting the strategy. And overall, there's a lot of new things that are coming in and have been coming in, have been perfecting. One of them is the EA, the automated EA, that's going to be inside the Pitch Profit Club, which is going to be very exciting. A lot of you guys are going to be able to have access to that. It's actually going publicly once again. It's going to be the first link down below. But before we go ahead and go into that, I want to show you guys, the concept that we're going to be teaching inside of that Pips Profit Club section, right? There's going to be the Pips Profit Club VIP section. It's going to be the first link down below. The second one is going to be a Pitch Profit Club free section where you guys are just going to be able to go in and kind of see what it is that we have going on in there as well. So you can go ahead and feel free to click on that, see how you like it and so on. It's only $37 and you're only going to get $37 off of this link down below. Now, going into that, I want to show you guys GBPM CD. This was sent out to the team the day of yesterday. Now, understand the institutional standpoint has a lot to do because we got to be able to understand how banks trade. We got to understand how hedge funds trade. We got to understand all this movement. Now, understand that what I base myself off is called Wyckoff, right? It's the Wyckoff system. So we have, accumulations, distributions. Understanding all this whole system, understanding how the market moves is very, very crucial for you guys. So you guys can have those better entries. As you guys can see right here, right? I have a long position on GBP NZD right over here. And you can see that snipe right there, right? Because it is a sniper entry. I want you guys to understand the concept of what institutional bias refers to. How it is that we trade, and what is the difference between institution and retail, right? There's several differences. Understand that the retail concept is based off of the knowledge that is provided by the government. Understand that the government provides all this information. Therefore, who's the one that handles the banks? Who's the one that has majority of the income of the economical income, right? Banks do, right? Who manages them? Governments. So understand that if they provide free information, it's due to something, right? That they want to go ahead and make money and make money and make more money. So I'm going to go ahead and teach you guys. I'm going to give you guys a quick lesson of institutional bias. Understand just a quick concept of what it is that you guys will be learning inside the Pitch Profit Club section, right? Which is going to be the first link down below so that we can get VIP access. And then if you just want to go ahead and get the free section, by all means do so. It's going to be the second link down below. So going into that, okay, I want to go ahead and talk to you guys. I like seeing divergence. Now, a good friend of mine was able to introduce me to divergence, which his name is Justin Time, okay? Well, he goes by Justin Time. His YouTube is Justin Equals Time. His link is going to be down below. It's going to be a third link down below, so that way you guys can go ahead and see it. You guys can go and reference to him. He's a very, very great, phenomenal trader, so I recommend you guys to give him a look as well. Now, going into that, I want to show you guys this right here, okay? Easy concept. This is the first confirmation I always do on my trading setup when I go ahead and look at charts. Okay, I confirm by divergence, which thanks to Justin, he was able to introduce me to this whole concept, so that way I can add into my trading system. So going into this right here, we can go ahead and see what is divergence. Divergence is when we see either the market on the, we see the market, the charts moving down one way, and then over here our RSI, our MACD, our OBV, depending on what type of indicators you want to go ahead and use, you can go ahead and do so. I know Justin uses the OBV. I'm using the RSI. There's a couple friends that use the MACD. Whichever works best for you and whichever is, more suitable for you. So I want to show you guys this, right? We see market moving down, and let me go ahead and change this real quick so that way it can be a solid color and you guys can actually see it right off the bat. So we see market moving down, right? Now this is kind of easy concept, but understand that you being able to understand the easy concept out of it, and not just that, but being able to be very patient to the moment of is going to help you out so much. So going into that, I see market moving down, and then over here on our RSI we see market moving up, right? This right here, we can see they're completely the opposite. Due to the fact that they are completely the opposite, this is indicating us that there is divergence in the market. Now, what is the next step for me to take from an institutional bias, right? From an institutional bias, we got to be able to understand that banks are going to run the market down or run the market up. So that way you can either, one, induce sellers, or two, induce buyers, right? Depending on what way you are going. And also, by the moment that induces sellers or induces buyers, it also is taking stop losses from either sellers or buyers at the same time. So understand this real quick. Now, we are going to be seeing, this market moving down. This right here we can consider as our seller's climax. Because we see the market moving fastly down, and then we have some type of rejection, right? Which we're going to have our automatic reaction. Now, after that, we're going to have a test, right? This is creating our equal lows, or also known as liquidity points. So meaning that once we see the market create either equal lows or create 1-2 runs to downside, we can see some type of liquidity being formed in this area. Now, what does liquidity create? What liquidity creates, it creates a pocket of money, okay, underneath. Understand that it creates a pocket of money underneath, and also look at this right here. Now, you see that the market, okay, it's moving down, but at the same time, it's not passing this region right here, right? So many people, many individuals would see this as a resistance point. Therefore, it would induce them to sell, right? Especially because we see the type of price action, we see some bearish movement, some really strong bearish candles leading us to the downside. Now, understand that for us to be able to take this in consideration, okay, I would take this as a sell from a retail perspective. But if I was looking at an institutional buyers with the confirmation of divergence, this is guiding us to understand that the market is just, one, inducing sellers, and two, it's going to go ahead and take some stop losses from our buyers, okay? Because people also bought right here, and people were selling right here. So understand that what's doing right here in this area, right here, it's inducing sellers. Understand that right here is a pocket of money. That's why you guys can see that I went ahead and placed a little money sign down here, because there is a pocket of money right over here. So the market has reached through that pocket of money and has rejected fastly, quickly. So understand that the banks went ahead and bought and sold at the same time. Understand that banks have to buy and sell at the same time because they want to go ahead and price themselves in for a bigger movement later on in the future. As we can clearly see the market, okay, what could it have been that section where they bought and sold at the same time, okay? The last down candle before the up move, or the overall price action. So as right here, we can see that the last down candle before the up move was this candle right here, okay? This was the last down candle before the up move. Now, yes, you could have entered right over here for a buying position, and your stop loss could have been right over here underneath the pocket of money that was already taken. Now, why did I go ahead and not take that trade personally, and I took this one over here? Just due to the fact that this is better confirmation when you see this. When you see the market has been doing this, it consolidated within that region, okay? This is called a explosion move, right? It's also called a push momentum. A lot of people know him also as expansion. There's a lot of sort of names for this type of movement. But overall, it is breaking our structure and direction. Structure and direction is when it breaks two previous highs or two previous lows in the market. So when the market went ahead and did that, it did an explosive move, right, to the upside. Which did what? It, one, got rid of a lot of stop losses that were over here of people selling, okay? And two, started inducing buyers, right? Started inducing buyers. So when it started inducing buyers, understand that once it did that, we create some type of support down over here, right? We create some type of support which is going to lead new buyers to get inside the market and put their stop losses right underneath, right? Put their stop losses right underneath. But understand that where the explosion started was down over here. This was our last point before the explosion. So the market is going to go ahead and tend to go to that section to go ahead and take its next move. Now, the reason why I like to take this trade specifically more than this one is due to the fact that it has already confirmed its direction. Okay, we have already broken, previous highs. We already have some type of direction moving to the upside, and we already have one thing which is down over here, a secured low. So what do I mean by a secured low? This right here is a secured low, okay? Because this right here went ahead and took all the money from the previous section, and also as you can see, we did not create liquidity over here. We just came in and out, okay? So meaning that the market is going to tend to come back to that area, so that way you can go ahead and grab better entries. And take profit would be highs of the market, which in this case would be this one area right here, would be first take profit. And second take profit would be liquidity points where it could be created, okay? Resting points in the market, in this case right here. And as you can see, this liquidity point, this resting point that we went ahead and mapped out had a overall 143 pips, right? We were risking 30 pips just because we want to go ahead and confirm that this low wasn't, breached. It could have been a lot shorter. It could have been to 15 pips or 10 pips, but if you guys see, the risk to reward is phenomenal. We have almost a 5-to-1 risk to reward, and this is what I want you guys to see, okay? all of these concepts are going to be placed inside Pips Profit Club. It's going to be a first link down below, like I mentioned. Now, not just that, but the educational section, we're going to be having lessons for you guys every Monday and Tuesday drop down. Pre-recorded lessons drop down every Tuesday. Monday and Tuesday drop down. On top of that, you guys are going to have live sessions from Monday to Thursday. Okay, live sessions from Monday to Thursday. They're all set in time. They all have schedules. So there's no need of, oh, when is this class going to be, or when is this session going to be, and this and that. Okay. On top of that, there's going to be Sunday Q&A. So every single Sunday, there's going to be Q&A where we're going to be able to interact, talk, and you'll see everybody's feedback, see how everybody did. And not just that, but we are coming up. Okay. Hopefully by today it is all set up and it can be, placed inside the Pips Profit Club section, which is what is going to be our EA, where automatically it's going to go ahead and retrieve every single trade that we place from our master accounts. It's going to go ahead and send them directly to the Pips Profit Club section, meaning that you guys are going to have direct access to every single trade that we place in time and place. Okay, so you guys are not going to miss out on anything. On top of that, so that way you guys can see the growth of that account, we are going to be funding a $500 or $1,000 account and only be using a 0.10 lot size. So yeah, that way you guys can see the growth of that account, how it's managing from the day of that we went ahead and incorporated this EA inside the platform, where you guys are going to be able to, take those trades that us from our master accounts are taking personally. So I'm excited for all the things that are coming up, lessons, live sessions, and overall signals, right? What else do you guys want for $37? This type of education is the education that you guys are going to see. It's going to be the smart money concept, which is a Wyckoff system, which is seeing divergence, seeing distributions, accumulations, a lot of other interesting things, and overall, which is very, very crucial, is the risk management. So I'm excited. I'm very, very excited. I'm very stoked for what's going to come. Like I had mentioned, there's going to be a lot of new things coming in. We got to go ahead and put some confettis in this. Thanks every single one of you guys for joining on today's session. I am going to go ahead and start putting more information on YouTube, so that way you guys can go ahead and start seeing more of this type of information, because I did go ahead and I was off for about a month or two just because I was perfecting a lot of things. So with that said, like always, I hope you guys end on the green note. And with that said, like, comment, subscribe, and I'll see you guys next video session. See you guys there.